Today I'm going to save you months of mistakes by showing you exactly what I would do if I started all over again. Look, most people jump into automated trading, making many mistakes, such as over risking, such as getting in and getting too greedy, such as using the incorrect frameworks and incorrect risk management strategies. And today I'm going to show you the exact framework that I would have wanted to use if I was a beginner. So what's the first mistake I made? The first mistake I made was starting with too low of capital. Look, a lot of people come into the Forex markets expecting that they're going to make a lot of money from their $500 accounts. And unfortunately, that's not going to happen. And if you are looking to start with absolutely nothing, you need to come into potentially like a business that's going to generate cash flow for you. If you are going into Forex, you need to already have some capital. I would recommend a minimum of $5,000 to $10,000 in capital. And this is because it's going to allow you to be able to have a lot more margin for error. And you see, a lot of the times with $500 accounts, all it takes is just for the price action to go against you a couple of pips and you've lost. Whereas if you have $10,000, you can even lose a couple of trades and you're still in the game. So this is incredibly important. As well as that, it's also important to have a decent amount of capital so that you can diversify potentially different strategies or different account sizes and also different risk appetites. For example, you could have one account that has $5,000 or one account that has $10,000, another that has $10,000, and one of them can be low risk with a specific type of strategy and another one can be high risk with another specific type of strategy. In this way, you're able to diversify as much as possible, decreasing your overall risk potential. The second mistake is getting into things I don't understand and not being able to assess performance correctly. You see, many people, when they get started in the industry, they fall to these flashing claims. And the problem with falling with these flashing claims is a lot of the times they are going to be BS. So you need to be incredibly careful and make sure that you're assessing the performances and looking at the numbers rather than what people are talking about. Forget the talk and make sure that they are walking the walk. And you can do this in multiple different ways. You can first and foremost check their track records. Look, the people can lie, but the numbers don't lie. So you can check the track records such as their MyFX books, and their MyFX books are going to show you their performance, it's going to show you the risk of the robot, it's going to show you if it's profitable or not. You also want to make sure that you only go with people or robots or companies, whatever it is, you make sure you only go with companies that give you realistic return expectations. You see, if any company is going to be out there claiming that you're going to do 50%, 100% a month, then 99.9% of the time it is going to be a scam. And if it isn't a scam, it's probably only going to work out for a very small time before you end up blowing all of your money. So make sure you're going with reputable ones that are actually giving you realistic return expectations. Realistic returns, in my opinion, would be 3 to 8%. And if you're really going high risk, you're pushing about 10 to 12%. So be very careful about the expectations for returns. And the last thing I'd check for when it comes to performance is making sure you're checking Trustpilot. You see, there's so many stories of people sharing their positive and negative experiences. Rather than focusing on the positives, because these can be faked, focus on what the negatives are. If the negatives are massive deal breakers where people are genuinely losing a lot of money, and there's a lot of people that are losing a lot of money, most likely this robot is not going to be good. Now, don't get me wrong, there's 100% going to be still negative reviews with any company because some people just don't know what they're doing and some people don't genuinely follow the guidelines of a company. So that's not to say that it's always the company's fault, but if there's like hundreds and hundreds of them, then most likely there's something wrong with the company itself. The third mistake that I made when getting into my trading journey with automated trading is that I had no goals and I had no predefined expectations of what I'm looking for in regards to risk. You see, risk management is incredibly important, and you need to always go into anything with a plan. You see, if you fail to plan, you plan to fail. So make sure first and foremost that you have your expected daily drawdown limits. And this is to say that, okay, if I have a specific amount of drawdown, I'm going to shut down my trading for the month or for the week, etc. So you can use equity stops for that, for example. Another thing that you should do is you should have profit targets. So if you're constantly chasing profits, you potentially could fall into the emotion of greed. And if you fall into greed, you can potentially increase your risk too much and fall into many different trading obstacles. You don't want to do that. So what I would definitely recommend is setting a profit target. So set a percentage goal. If you hit that percentage goal earlier on the week, and simply stop trading. Another thing that I would also recommend is go very low on your risk. Like, a lot of people don't really recognize how much you should be risking. For example, for me, I would only risk 0.01 per $5,000 in every single account with my specific strategy. Now, every single strategy has different risk settings, so that's not to say that you can use what I just told you. And for other strategies, this is just for my specific strategy and my specific algorithm. So I would only use 0.01, and you'd be surprised. I can keep my drawdowns fairly low. And the game is not about trying to increase your lot size and increase your basically the transaction amount per trade, what you're trying to do is you're trying to increase your capital. This is how you're winning this game. Have a large amount of capital. That's not to say that you can't do anything with 10K. You can, but have realistic expectations, of course. The last mistake that I made is I had no scaling plan. And this is very, very important. You see, I wouldn't necessarily just dump all my money in one go. I would actually scale slowly, especially if you're not familiar with a strategy or you're not familiar with a company. This is like your first week with them. For the first 2-3 weeks, even the first month, I would demo the account. First and foremost, prove the concept that the robot actually works on the demo account for a month. Once it has good performance for a single month, then I would only drop about 20% of my initial capital that I already intended on investing. Once you drop that 20%, once again, do it, trade with that for another month or two. Slowly, then I would just continually add 20%, just adding in a little by little. What I would also do at the same time is constantly withdrawing and taking out profits. The goal is to try and get as much profits as possible out of your account to first and foremost recoup your initial investment size. If you recoup your initial investment size, then you are essentially only trading with profits left in the account. So this is basically the first goal that we want to achieve. And with that, I usually like to set myself a goal of trying to withdraw my profits every single week. And this just has many benefits, such as just helping you with the mentality of just paying the trader and making it feel like a proper business rather than just trying to hoard and compound for years and years. So take your scaling very slow. Don't just jump in. This is an investment. Most investments take a long time to actually see fruition out of. So make sure that you approach this automation with the exact same thing. So this is exactly what I would do if I was starting Forex automation today. If you have any questions or you have any other points that you'd like to add, make sure to drop a comment down below. With that being said, make sure you click subscribe as well and drop a like on the video, all that good stuff. And with that being said, I'll catch you guys on the next video. Take care.